Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me. And so, welcome to pre-market prep. This is something that's new that I'm going to try to do every single day that I don't work, which, as you will find out, is kind of an odd schedule. But I just thought this would be a nice way to provide you guys with some consistent content, going over things that stand out to me, and then also highlight some things, discover some things that might be useful in exploring in more depth, either with videos or just by taking clips from this. And so this is a stream I'm going to try to do every morning starting at 8 a.m., which for me is 7 a.m., which is a little early, but at the same time, it's actually later than I would normally have to be at work. And, really the idea of this is that I'd like to quit my job at some point this year and focus on the channel, focus on trading. And I think this could be a really nice way to kind of build in that routine. I don't know about you guys, but for me, I've been having a little bit of seasonal depression, I'd say, just very cold, very dark. And yeah, I've just been a little bit unmotivated. I thought this could be a nice way to motivate myself and perhaps to motivate you guys to focus more on some trades. And yeah, so the reason why I am doing this at this time is because there are some shows, some streams that I like to watch that begin around 9 o'clock before the market opens. And so I thought this could be a really nice way to just kind of set up, be prepared, and then we can, part on our merry ways to watch the shows that we do enjoy and then get on with the market open. But anyways, with that being said, please provide feedback on this. If you do enjoy this kind of content, make sure you like it. If you want to see more of it, make sure you subscribe and do share your thoughts in the comments below. And so for this stream, I'm first going to start out with some of the more basic fundamental charts that stand out to me. Then I will dive into some of those that, I've noticed stand out as being pretty interesting, ones that I trade. And then I'm going to just go over some of the options data from Unusual Whales to see how they stocks performed yesterday, how the options chains performed yesterday, if they're more bullish, bearish, good time to add, good time to sell. And of course, none of this is financial advice, just kind of, going over my little exercise. But yeah, so the first one that I have up here is the UVIX, ticker symbol UVIX, which is the 2x long VIX futures ETF, tracks the VIX or the volatility index. And so I like to trade this one because I feel like the moves to the upside are pretty nice, but also you can trade shares of this ETF rather than have to do options or contracts that do expire, which is what happens with the VIX. And so the reason why I wanted to go over the UVIX, I have been covering it a little more recently. And the reason why is because there is this reverse split coming up, or actually that was in the past, happened yesterday on the 15th. It was a 1 for 10. And so I had previously drawn these green and red boxes, just kind of highlighting how there's, a big move to the upside followed by a big red pullback. But then that led to, nice opportunity to buy the dip, upside move, again, upside move, and so on. And so these boxes are really just, kind of arbitrary, just based on what I viewed as the low or what was the low during this range, and then going up to the high following that, and they've all resulted in some pretty nice gains. And so I don't necessarily think this is the best thing to be trading a lot, but I do think it is good to be building small positions in it so that whenever we do see corrections in the market, which is going to affect all of the stocks that we hold, this is a very nice way to hedge against that, because what I have done, I believe on, this move up here, the more recent green box that we didn't just get out of, but this one here, I was able to take some profits on that, and, that was on a day, basically these 2 days here, when the market was red. So I was able to roll any of the money that I had in the UVIX into the other place. So effectively, it's like keeping cash on the side. But when you want to have that cash, it's actually going up in value. And then that can be rolled into the other stocks. So I just find this to be a really nice one to be trading. And there is one level that I didn't include in this. I just tried to transfer all of them, but the trend lines were a little bit difficult to transfer over. So I'm just going to do this kind of approximate here. And you can see how I am drawing this. Let's see, really just based on, being the low from over here, that was the end of August, and then just kind of finding some support here. This would be towards the end of September. And then over here, of course, we did break through that. And so that was a level that kind of made me think, oh, well, maybe there's like this regime shift or something with the volatility index, and that we might be seeing something new. And we did start to make new lows. Ooh, and maybe I want to extend this over even a little bit more to connect to there. So yeah, I mean, I think that's just a really nice, very simple trend line. Do see how that was support over here, gapped below it, and then moved up to test that. So yeah, I mean, technical analysis does work pretty well with the UVIX, just to kind of complement these, red and green cycles, which are approximately 2 weeks each. Of course, they can be a little bit shorter, as you see here, just about 4 days. But I feel like they've been a little bit wonky just because we've had a lot of 4-day weeks recently. This is the first 5-day week that we've seen in about a month. So I do think that basically we'll be starting to form a bottom, possibly the middle or beginning of next week, but I would say by the end of next week. And so that effectively means that the stock market will be going higher. As this pulls back, the stock market's going higher, and then we'd probably see a correction, whether that means that the stock market's going to new all-time highs, or if we're just going to be making lower highs as we kind of trade lower. I just think that this is a really nice way to be taking advantage of any corrections, whether they're slight or major. And with that being said, I have over here, I was picking up shares of this ETF around, around $3, which would translate to around $30 now. And that worked out pretty well to me. I trimmed at about 10%. Could have made more money on it, but I wasn't so sure it was going to get up to that yellow line. Should have had more conviction in that analysis. And so basically what my thesis is for now is, I am very slow, very passive with building positions. And if this does dip to around $29.90, which would pre-split be $2.99, I would start to add. But because we have kind of been testing, forming a bottom here with these boxes, I do think that we could be breaking below these levels. So I'm just going to put a little horizontal line there just to keep an eye on that, because that does look like it's right exactly at 30. Maybe I'll make this line orange, and I'm actually just going to make this one up here a little less thick. So yeah, I mean, I think that we could be breaking below 30. Don't know exactly where we would be going. And let's see, a way that I can kind of get an idea of that is by doing a Fibonacci extension. So going up from the top here to the bottom here, and then the top. And then if we take a step back, that 100% retracement would suggest coming down to 17. So I don't really think that's going to happen. I don't think that's necessarily a good level. So yeah, I mean, let's just see if it holds 30. If it does, there could be a nice bounce, potentially up to this blue line right around $40 a share. I doubt that it would be getting back to 55. And so the reason why I kind of doubt that it will be making these highs is because, we just had a reverse split, and the reason for that is I believe because of contango, the value of these ETFs do diminish over time, and so they had to do a reverse split because they expect it to go lower. So I do think that it will, tend to make lower highs and also lower lows. And I'm just thinking, maybe I want to do a parallel channel real quick, and then I'll move on to some other charts that stand out to me. But I'm just going to draw a parallel from the high that was hit here on September 5th, and then connect that to the high that was more recently hit. That was on, let's see, what date was that? Looks like December 19th. Connect that to the high there. Does look like we have a nice little level of resistance there, and then connect it to the lows over here, which, maybe I want to go to the lows. Yeah, I think I might, it's kind of arbitrary, but just doing it from the lows of December 4th. And so we do see that channel there. I'm actually going to make this a little bit thicker and light blue. I just find that to be a very soothing color to look at. And yeah, I mean, we did break below that downtrending support over here on, let's see, August 19th. But we did, even previous to touching it there, we did touch it back here, leading up to the big move in on August 5th. So we tested that level in the middle of July. And then more recently, we have tested again. So rather than doing the Fibonacci extension, that would suggest 17 as a level of support. I could see it actually coming down to, let's say, if I just draw the line down here, this intersection, I might just do it kind of arbitrary there. $25.50. I was going to suggest $25, just being, not a round number, but a whole dollar number. So I think that is where it could be going. And I'm going to actually make that a purple line just because I like the way that purple stands out. So yeah, I mean, let's see how 30 holds. If it doesn't hold, I feel like 25 is on the table. And then that could be a really nice way for hedging when markets do make a correction. And so with that being said, I will switch over to the S&P 500 to look at that real quick and then get into some stocks. But just like the thumbnail suggests, you see Ed with a cup of coffee. I got my cup of coffee here, really, just trying to get into better habits, getting ready for the day rather than rolling out of bed for the market to open. We get to, roll out to see the charts here. And so one thing, I am looking at the daily charts. I should note I could be looking at the pre-market data. I just don't think the pre-market data is necessarily that important. But with the UVIX, if I do switch over to the 10-minute chart, we can see that, it's perhaps bouncing around, that $30 level. We did hit a low during market hours yesterday of $30.09. As we can see up here, the low was $30.09. We might be breaking below that today. This could be a bear flag, just like we saw a down move here, consolidation, continuation lower. We might see that again. And that might actually be a nice way to get an idea of where it could be going. If I do a Fibonacci on a Fibonacci extension on the 10-minute time scale, don't know exactly how high it's going to go, but with that drawn there, if I do take a step back to look at the daily time frame, we can see that level is around 28.68, and that is basically the measurement from the top to the bottom here. Translate that to whatever the high is, that could be coming down to 28.68. But anyways, yeah, I will look over at the SPY real quick. And so the SPY does track the S&P 500, but this ETF does include pre-market and after hours trading. It looks like it's down. Actually, it looks like it's green now. It's right around flat. So yesterday we went up almost 2%, going up 1.82%. On the 15th, got a pretty nice gap up. So I think that looks really good. But one thing to be wary of is if we do look at, I believe all-time high for the SPY, that was, let's see, $607.03. That was hit on December 6th. From that, we can draw a trend line or array, just so we get, 2 pivot points. And so I might get that other pivot point to be, let's see, the closing price from December 26th. And so we've got this nice little downtrend there that we're not exactly up to that level. I do think that will be acting as resistance. And I might actually make that yellow so it stands out more and doesn't contrast with the red candles there, or have a conflict of interest with them. So yeah, yellow stands out there. This has been notable resistance in the past, and so I am wondering if, let's see, what is a level that could be getting to right around there. That will be around $600. It looks like $596.07. So we'll have to keep an eye on that. Really just being an arbitrary level, but we will revisit this in future pre-market prep videos so we can kind of see how that performs. What would be really nice is if we actually break above that and then maybe get some resistance right around the all-time high, but then pull back to that downtrend, then test it as support, and then go higher. And so that's what I would like to see. And to be honest, that's kind of what I anticipate seeing. And the reason for that is I just think that there are a lot of things that will be happening with the new administration. I got some options orders canceled there. That's what that alert is that popped up behind Ed. So I'll have to reset those. Really just selling covered calls. But anyways, with the new administration, I do think that stocks could be rallying to new all-time highs. And I think that 2025, which I have covered in prior videos, I think 2025 is going to be synonymous with 2021, which was a bull market before the bear market of 2022. So I think we've got a lot of opportunities. And so, yeah, I just wanted to put this up here, the SPY, because we can't look at the pre-market trading. And if I do switch over to the 10-minute time frame, we actually got, kind of a wick up to nearly that level that I had drawn. Got a wick up to $595.60 about 20 minutes ago. It was pretty recent, and we did kind of form tops around $595. So we'll see where we open. It looks like this is where we closed. And so, yeah, we'll have to see if we do gap up again or if we start to kind of form some tops. But yeah, so this is the SPY. Oh, and, I had talked about with the SPX, which I'll go over in just 1 second, possibility of there being a head and shoulders pattern. In that video, I had talked about thinking that it will be invalidated, that this is actually bullish consolidation. So let's look over at the SPX. And this one, unfortunately, doesn't have pre-market or after hours trading. So I'm just going to be looking at the daily with this one. But these are the levels that I did go over in that recent video, which I'll actually just pull up here so you guys can see it. And so that video, if I do scroll down here, it's this one with a little cat that is screaming there, claymation cat. I'd recommend checking that video out. I think it will be a good guide for the new year. But of course, I could be wrong. It could end up playing out as a head and shoulders pattern. But I don't really see that. We got this, really closed Friday. Let's see, below this purple line, which a lot of people were talking about, that being the neckline of this head and shoulders pattern. But it just seemed to me to be a little too ugly, like it had gotten invalidated more or less with these wicks and actually this, open below that level. So I just wasn't too compelled by it. We did close below on Friday, below that purple line, and then actually gap down, opening lower on Monday the 13th, but then reclaiming this light blue downtrend, which as you can see is the base of this parallel channel. So got, nice bounces here. And that to me actually seems like it's a more valid neckline for the head and shoulders. But I just don't think that that's playing out. I think that, too many people were drawing this up saying, the top is in, the top is in. I just think that the new technological advancements that we're seeing, the new administration, going to be sending stocks higher this year. And then what we saw on Tuesday, we did on Monday, I should say, reclaim that light blue downtrend. We also reclaimed the low that was hit on Friday the 10th. But on Tuesday, this was kind of like, a little bit of a tense time because we did continue higher, but then we pulled back over the course of the day on Tuesday. Looks like we got rejected from that purple neckline, I should say. And then wicked lower to test that low as well as the downtrend, but closed higher. So that looked good, but it was kind of, in this precarious, middle zone, being between this purple neckline and the base of that channel and that low. But then, of course, on Wednesday, we gapped up. And in my view, looking pretty good. But just like with the SPY, I am going to draw a downtrending ray, going to the same exact days, the same exact levels that I drew on the SPY. And so that is a level that we might be seeing some resistance at, and that is going to be at around $5,980. So I'm just going to make that a little bit thicker and make that red. I could see that being some resistance, just like over here, but then just like over here, I think we could see a move higher, retest that as support before continuing higher. And so we'll have to see about that. But, if we do get rejected at this yellow downtrend, I don't think that would be such a big deal. We have been forming lower lows here, really, I guess, just between these two here. And so if we do pull back, but then find this purple line around $5,865 as support, I think that could be setting us up for a breakout of this downtrend, a move to getting back above $6,000 a share, getting back up to this trend line, and perhaps, I suspect, putting in new all-time highs. And like I said, going over in, let's see, this video, I think that we could be heading up to around $7,000 a share this year, but I do think that we could be putting in a top, so good to be paying attention to that. So anyways, that's just kind of my little bit of a market overview. And actually, well, maybe I want to look at Bitcoin real quick, and then I'll go over one of the stocks that stood out to me that I saw yesterday. Crypto list over here. Not going to go over it in Webull, but I did just want to, let's see, check it out over here. So, yeah, I guess this does suggest, that we could be seeing some downside with Bitcoin coming down to maybe around $86,000. That would be the 382 that could be acting as support from this Fibonacci. But I could also, let's see, adjust this drawing. Now I'm actually going to do it to the penny right here. So let's see, 49,105.42. So get that just right, which I feel like I probably had that to the penny before, and then it just kind of rounded. So that's a little bit disappointing, but these pennies don't really matter. And yeah, so I'm just going to lock that into place. But this is a 382 at 86,000. One thing you might notice, I don't have the 236 up there, and so I'm actually going to add that. Then I'm going to remove these other levels just so it's not too cluttered, and really just kind of like working with the thesis that it could be pulling back to these levels. And so the 236 looks like it's at about $94.4 thousand a coin. Another level that I'm sure you guys have heard about is $92,000. And so actually, if we just look at, let's see, I'm going to do it from the low that was hit on, let's see, November 25th. But I do believe that these candles don't open and close at UTC or GMT. I think that they are a little bit off. So take these candles with a grain of salt. It's just easier for me to chart here. But I'm going to make this level green. Actually, maybe I'll make it slightly different. Green, maybe green doesn't work for that. Let's see, I'll just do that purple. So it stands out from that light blue. But yeah, that's like approximately 92. Here it looks like $92.6 thousand. That has been tested multiple times as support. Now we have, been wicking below it. It looks like on the 13th, on Monday, we wicked down to a low of about 89,000. Here it looks like $89.2 thousand a coin. That was a great dip buying opportunity. I'm not sure if you guys partook in that, bought the dip. I did at 91,000, but not a super aggressive dip buy. And, if that was to get filled, which it did, then I'd reevaluate. And, I was recognized, well, I could have dip bought at 90,000, but, I was happy with it. I didn't necessarily know that 90,000 would get filled. And so, yeah, like I said, happy with that. And yeah, other things that I could draw up here, very similar to what we're seeing with the S&P 500 is actually, this is high from January 6th. Rather than being the close from December 26th. But if I do draw a trend line there, let's see if I just lock that into place, make that a little bit thicker and yellow, we could see there's a pretty nice downtrend there. We are trading at that level, having hit a high yesterday on the 15th of above 100,000. It looks like about $100.9 thousand a coin. We are now below 100,000, right around 99,000. So I think we could be seeing a pullback and perhaps a retest of 94.4 thousand, which is this 236. So I would look for that to see if that holds. If not, then look for 92. If we do sweep that, like coming down to 89, like I had said, I had a dip buy order filled at 91,000. Maybe the new dip buy order level is 89,000 to just add a little bit. If that gets filled, great. If it continues lower, it might be a falling knife, could be coming down to perhaps the 382 at around 86,000, or maybe the 200-day moving average, which I have up here, which is currently around 74,000. And I do believe that would, correspond with, let's see, I'm just going to draw kind of an approximate box here, just, with the highs that were hit in March and then coming down to, let's see, the highs that were hit, over here, as well as, so over here would be, let's see, in May, also tested here at the end of August, and then in September into the beginning of October. I've also got, a retest of the base of that rectangle before going higher. So I do think that this range is pretty notable, and so I am going to actually, just lock that in place so it doesn't move. I'm going to remove the exterior shading of that, and let's see, what color should I make this? I'll make it orange for Bitcoin. I think that could be a pretty nice dip buying level, so good to consider that. And since I do have the 200-day moving average up here, and it does seem like it could be, getting tested later on, I might also add, let's see, some more levels, like the, let's see, the 50-day, which, let's see, I guess I'll have that up here in pink. Okay, so yeah, let's see. Well, what I might want to do, 250, and yeah, let's see, in pink, so I'll add that. And, 20-day, that would probably just be even higher. So let's see. And yeah, I mean, these are kind of just arbitrary. So let's see. Yeah, I don't necessarily think, let's actually do the 100-day. And I am just going to change this to 100. And we can see that blue level. Yeah, that might be acting as, wait a second. What happened here? What happened here? I don't want the 20-day. I want the, the 200-day and the 50-day right there. So the 50-day moving average is around 87.5 thousand. So we'll see if that gets tested. But yeah, I mean, I think that if there's the possibility of a Bitcoin reserve, strategic reserve for the US, this could be taking off. So, yeah, I mean, I just think that with this being the year following the Bitcoin halving, I'll just pull up a video that I had done on this. I do think that it will be going notably higher, and perhaps up to 150,000, maybe 200,000 this year. But we might see a good amount of red between now and then. It's just very volatile, so do consider that. But I do go over it in this video where I talk to Grok, ask him about that. Has less than 100 views. I think it's a great video, so I'd really encourage checking that one out. But yeah, I do go over Bitcoin in a fairly technical way in that. But with that being said, I'm just going to go over some stonks that I like to cover. And so the one that stood out to me that I was looking at is actually Neo. So just going to go over some levels with this. Let's see. But I probably just want to clean up the chart a little bit because it is pretty, looking pretty cluttered. And let's see, the y-axis scale is linear. So let's see, how can I clean this up? So I do think that we could be seeing it come down more. And we did, unfortunately, break this fib level, so I can remove that just to remove some of the clutter. I think that purple line is something to be paying attention to. It is a neckline, which, has already played out. So maybe I'll make this one dashed. And let's see, this level, probably want to make that a little bit thicker, make it yellow. And yeah, this is not so important anymore. And this is just a little bit too thick. Let's see. But I do think that's a pretty important level. So I might make that. Let's see. I make it orange. Okay. So yeah. I just kind of wanted to go over, let's see, the Neo chart here. And so I'm actually probably going to take a clip of this and make it into a video again, just a nice way for these pre-market preps to help me be a little bit more productive. So I'll start that in just a second. And so this is the NEO chart, ticker symbol NIO, and it looks like it closed on Wednesday, January 15th at a price of $4.10, being up almost 0.5% on the day. And it does look like in the pre-market, it is up about 1 penny or about 0.25%. And so I wanted to follow up on the NEO chart because I have been pretty bullish on it. I do think that it will be hitting $8 a share later this year when China starts to release some stimulus. But, I have thus far been wrong with, calling for breakouts. We can see this yellow downtrend here based on the high from October 28th, as well as the high being the other pivot point from December 9th. And we can see that that was recently a level that we got a rejection from on January 6th, and then we have pulled back. And so yesterday I was a little bit concerned that we're starting to form a bear flag downside move here, consolidation. And and that was also, right around $4 a share. I do have this green line drawn here at $4.09. If we take a step back, it looks like that was the pivot high from April 18th. And then following that got rejected, bounced lower, and then to move up to these highs over here. Also did kind of get a retest of that level. It looks like towards the end of June, then broke below it, consolidated below it in, let's see, August. Basically for the month of August, consolidated below that level. So I feel like it could be acting as support. And one thing you might notice is I do have this uptrend here, which is based on the two lows over here, one being the low that was hit on August 8th at a price of $4.02. And then the other pivot point was the low from August 28th. That was at, here, let's see the numbers up there. That was at a low of $3.68. I think the low over here, $3.63, not $4.02. And so with that, we got that uptrend, and we can see, if we take a step back, that we're consolidating right at that level. So I am hoping that this is finally forming a bottom. I could, of course, be wrong, as, I have been early in expecting, these moves to be breaking out. But, I'd rather be talking about this when we see the pullback rather than the move to the upside, because those have just been followed by rejections. But this, of course, could be going lower. One way to get an idea of where price could be going lower is if we do a Fibonacci extension from that high to the low, and then the high that we just saw on Tuesday the 14th. And if we take a step back in the chart, we can see that level, that 100% level, so just basically the same type of move from here to here, that distance from the top here to the level here, that will be at $3.29.5 or $3.30. So quite possible NEO could be heading lower if we are in fact forming a bear flag, but I have some hope that what we're seeing now is forming a bottom because of that light blue level that has acted as prior support. I think it could be acting as support again, and that we could be seeing some moves higher. But levels that might be acting as resistance, if I do draw a horizontal line here, that would be around $4.30 or 36 cents to get some bounces from that level. And so that could be acting as resistance. So keep that in mind, $4.36. Also, this downtrend, perhaps around $4.60 could be resistance, or really just right around $4 if we do, actually, no, $4. So I was saying $4.30, or $4.60 could be some resistance, maybe 450, really just being approximate. And then I do have this dashed trend line here, which I was hoping was an inverse head and shoulders here, an inverted head and shoulders, but we did not see that, or at least it took a while for that to play out. So that could be another level that we bump our heads at, and that would be around $5 a share, and also perhaps corresponding with this orange downtrend, which does go back some time, did act as resistance over here going back to the beginning of 2022. We have not traded above that orange downtrend, so I do think that will be substantial resistance. But if we do start to see a lot of stimulus coming from China, we could see a breakout from that level, perhaps getting to what I view as, a more exciting inverse or inverted head and shoulders pattern, with the left shoulder here, big head here, and then getting up to that level would actually be below $7 a share, marked by this green line. But following that, we could be seeing some big moves, perhaps to $8 a share. I do think that's very realistic for sometime later this year, but perhaps up to around $10 or $9.57, marked by this gray line you might be able to see there, or which I should say corresponds with the armpit of the inverse head and shoulders, or perhaps getting up to above $10 a share to around $11.67 that I've marked here. So yeah, I hope that was helpful. And so with that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And so yeah, I'm probably just going to release that as a clip because I'm excited about NIO. But a couple things that I am excited about. Hydro Hustle, I will look at WOOF in just a second. I did just want to go over, forgot to kind of include it in that video that I'll probably release a clip of later, but maybe I'll do it just cleaner because that was kind of rough. I just wanted to go over some of the unusual whales options data really briefly. I'm sure not all of you guys are that interested in this, but something that I have been trying to get better is just interpreting the volume charts over here related to the net call premium. So this is going to be for all NIO contracts. And so this data, if I do scroll up, we can see this is for the actually, this is just for NIO, so I can forget about this contract. But if I do scroll up, so all of that data is visible behind me, what we can see is that, the stock price, perhaps, formed a bottom, which is what I'm hoping. I'm talking about this possibility of a bottom rather than a bear flag. I've got the yellow, which is the stock price, did bounce, close higher than it opened. And what we can see, we've got the net call premium in green, the net put premium in red. And so, this is just my trying to get better at interpreting this data. What we can see is the net call premium was kind of flat. Same with the net put premium, kind of flat at the beginning of the day. But then towards the end of the day, net call premium went up. Net put premium also went up, but to a lesser degree. And what we see here is in this volume, my understanding of it is there was more net buying, whether that's of calls or puts, any contracts, more buying of contracts. And so that looks good, more activity with the NIO contracts. And since we see the net call premium above the net put premium, that means there was more net buying of calls than buying of puts. And so that is more bullish. And what we could see in the call premiums over here is that the net call premium ended the day around $440,000 in premium, whereas the net put premium ended the day at about $66,000 in premium. And so that does make me think that we could be seeing a bottom in NIO. And actually, if we do adjust this to be looking at, let's say, the past 7 days, we can see that there has perhaps been kind of a shift going from red over here to green. So this is more net selling. And this, although net selling would correspond with more, net selling. Yeah, so this is where it gets a little wonky for me because we have all of these puts going up, so more net put premium going up. But I guess that it was more or less balanced by the selling of these calls. So yeah, generally, that makes me think that, this was more bearish over here with the green lines coming down, selling of puts because the net premium is going down, whereas the net premium of puts is going up. So that does look, bearish over here. Maybe we have shifted to being more bullish for NEO. So I'm pretty excited about that. And then also looking at the data from these contracts. So this one over here is a $10 call that expires in June. The reason why I was looking at that is because it did see, spikes in the candle premium here of about 1.5 million, followed by 1.2 million for this contract. So that kind of put it on my radar, this contract. And then if I do scroll down, we can see that there's been a lot of selling of these contracts, thousands of these calls being sold. So that is bearish. We had the open interest going from around 70.6 thousand contracts, really 72,000 contracts, going down to now about 6,900, right around, 61,000 approximately open interest. So did lose approximately 10,000 contracts over the course of the past 10 days, week and a half or so of trading. So it doesn't look so good, but we did get our first increase in open interest by 263 contracts from yesterday into today. So we'll have to see what kind of volume gets traded today and if the open interest continues to go higher. So I will be very interested to see that. Another contract that we can look at is the $8 call that expires in June. This is one that I personally am fairly heavy in. And this one, interestingly, we can see that it has been increasing over the past couple weeks, but yesterday was the first day that we saw a decrease, going from about 6,000 contracts open to about a little bit below 6,000, so a decrease of 55 contracts. So that is, a kind of a shift from looking good to looking not so good. And then another contract, and personally, all of these contracts, these 3 NEO contracts, I am holding. But what we can see with this one is kind of like a mixed bag. This is a leap, so it expires in 2026, expiring today, January 16th, on the 15th. And that one, we have been seeing some selling between, so I guess on Tuesday, we saw an increase of about 29 contracts, but yesterday, on Wednesday, we saw a decrease of 18, still right around 22.9 thousand contracts. We were up to around 23.5 thousand. So did see a decrease of about 600 over the course of the past week or so. But yeah, I just think that what we're seeing here in this volume over the past 7 days is that we have kind of seen a shift. So I think that looks really good. That does stand out to me as being exciting. And so, yeah, I'll come back to the chart. It's over here, and I'll just pull up WOOF. But, all honesty, I'm probably not going to be doing too many requests during these pre-market prep trading day streams, just because I'm only going to be doing them for an hour and I'm not going to be able to get to everybody's requests. So really just kind of wanted to do an overview, and more specifically focusing on those contracts and that data. I just think there's a lot of value there. And so with WOOF, I'm just going to draw a trend line going from the low that was hit, it looks like on April 25th, draw that going up here. So I feel like, it's quite possible that level has been tested. I just drew that really, being kind of approximate. But if I do, I'm just going to make it a little bit thicker, and, yellow stands out pretty nice there. And so, if I were to, have it from the low over here from April 25th, and then basically, be an approximate, but just have it, connecting with the closes over here in the low from this day when it was actually green. Did get some wicks below, but, I do think that's kind of a nice level there to be considering. Didn't quite pull back to it. Maybe that is a bottom though. I think that some people might draw that yellow line and expect it to get hit. maybe that bottom is in, but maybe it does get tested. And really, the low of 361, if this yellow uptrend is tested again, maybe it could be coming down to, I feel like 350 would be a little bit of a stretch. That would be like right where the cursor is here. And so perhaps could get some wicks down to 350, but if that uptrend is to hold, I'd like to still be seeing closes above it, but we could get, a fake out close below it and then a move higher. Yeah, so that is a level I would be watching. Pretty easy to draw up there. We can see that, we do have potentially a double top, and what was a signal that this may have been getting rejected. And so I'm just going to draw a horizontal line, really just from the high that was hit on, let's see, October 4th, that being at around $5.89. One thing that we can check, which I think is really good to be looking at, something that did play out with GameStop over the past week, is looking at the volume. Does the volume support the stock price getting up here? And this is actually kind of contrary to what I was expecting, just glancing over at the volume. It does not line up with what I was thinking. And so here, we got up to this level and we had volume that was about 8.3 million on October 3rd. And so I was thinking that we'd probably be seeing less volume that would suggest rejection. But what we actually saw was more volume. So that would suggest more strength, but that was also with earnings here on December 6th. Did get rejected there, so not really a tell in that. But what we can see, while we don't see it in the volume, because we do have higher highs formed in the stock price, we do have higher highs formed in the volume. So there's no bearish divergence there, which you can do not only with the stock price you want to be doing a comparison between the stock price, higher highs, and an indicator, whether that's the volume or the RSI. And so there's no divergence between the stock price and the volume, but there is a divergence between the stock price and the RSI. And so we can get an idea from that if we do, let's see, just draw kind of a casual trend line. I can just do it from the lows over here, connecting it. Actually, that's not going to be a good way to draw it. And so what I'll do it is just from the highs over here, and then, getting a rejection over there. And then if we do draw basically the same type of thing, I can actually go further back in time. We have been forming lower highs. And this is actually pretty subtle. It doesn't look that much lower, but it is in fact lower on the RSI. So that is some bearish divergence, but it's very, very subtle. But yeah, at this point, that wasn't really a good tell looking at the volume, but perhaps with the RSI, that was a tell. But yeah, looking at the chart at this point, what are some levels that we could consider? And so really just kind of taking a bigger picture view, not going from the low here to the high, because we don't need to do a retracement to that because we've already done a full retracement. We have broken below the low that was hit on November 19th, which was $3.81. Maybe we're forming a double bottom there. What are some signs that could suggest this is going to turn around? Here, we did see spike in volume over here, but really volume has been kind of consistent. So, tough to say. So I think that a better way to get an idea of where the bottom might be is by doing a Fibonacci retracement, but, taking a step back on the bigger scale, going from the low here, 223, and then going up to the high from, let's see, December 6th. And so I don't think the 236 or the 382 are going to be useful. So let's just throw up the 50%, which we are below. Let's see, the 618 does correspond very nicely with that double bottom. So I think that's a very nice level to consider. Also, I'm not going to leave it up there, but if I throw up the 65% retracement, which that range between the 65 and the 618, that is the golden pocket, did pull back to that level, that range very nicely. So that could be a bottom signal, but if it does go lower, the 786 is going to be around $3.10, also corresponding with the consolidation over here that could be acting as support, that trading below that level. So that is one I would be looking for if we do break below this yellow uptrend. But, generally, I do think that WOOF, which is Petco, is likely to be finding a bottom right around where it's currently trading at. So yeah, hopefully that was helpful. And so yeah, that's the only request I'll be able to take because I just got about 10 minutes left. And so I just wanted to go over actually some of this unusual whales options data. And so for these streams, what I'll be doing is I'll probably spend the first half an hour going over charts, which I did go over at the beginning of this one, really focusing on the UVIX, the S&P 500, and Bitcoin. And then I'll shift into going over a chart that stands out to me really related to the options data. And so I just wanted to be looking at this data that's just above me here because we see this green volume in the NEO. I just went over that. That makes me think we could be finding a bottom. And so I'm just going to go over these tickers that I have gone over, that I do go over in the weekly options videos. One of them, AMC, I was expecting, if I do go back to the charts, I'm just going to pull up the stonk list that I have here. If I do look at AMC, I was expecting, just like over here, that we might be seeing 7 red days. Looks like we just got 4 red days. Didn't put in a reversal candle that I was hoping we would be putting in. I'm just going to pull it up from my X profile so you guys can see it. Let's see. And so I wrote, very nice reversal candle on AMC, hoping we close above yesterday's high of 356 to signal the bottom is in. Though, let's not get ahead of ourselves. And so I'm glad I did not, because we actually didn't close above 356, but we did get a nice inside bar closing at 351. Pre-market looks like we're at 355, but we need to be seeing a close above 356 to suggest the bottom is in. This could be just a pause in a continuation down. And so as you guys know, I am expecting or preparing for the possibility of $3 being hit. 350. We did hit that level, so I'm glad I was patient and waiting for that. And yeah, but I will be doing a DD video on this, tomorrow. So that should provide some insights into my views on AMC. But yeah, just looking at the contracts here, we can see all of the contracts that, the stock price was going up as the net call premium was going up. And with that, we actually see the net put premium going down. So that suggests calls are being bought, which is bullish. And that's getting up to over $1 million in calls. So you can see 1.1 million, which is, 1,100,000 in the premium there. Whereas the puts in red have been negative. So really just green over the course of the day. So that's looking really good. And what I might do is I might remove the contract volume just so we see this a little bit more detail because I'm just looking at each stock in general. And so another one that we have here is going to be BlackBerry. Again, just like AMC, we see the stock price go up a little bit and then just kind of flatten out. We do see net call premium going up, but hitting a high of, around 308,000, but then pulling back, closing the day at around 211,000. Net put premium was only up by about 35,000, so it was up. Puts were being bought, but much fewer than calls. So this is looking pretty good. So I like that. If we look at Celsius, I feel like this one's a mixed bag. Yeah, so this one, it's like 250-50. We do see net call premium was positive for the majority of the day, but then it did end negative. Net put premium started negative, so that's why we see this green volume here. But then net put premium went up, closed the day positive, and net call premium closed the day negative. So yeah, a mixed bag for Celsius. So that is one that I'm not too convinced the bottom is in with that, or that it's looking bullish, that it's flipped bullish. Whereas with BlackBerry, this one looks like it's more bullish. Same with AMC. And then so another one to look at is going to be ChargePoint. This again, more bullish over the course of the day. But if we look at the net call premium, it closed at, less than 22,000. So not so hot. And then net put premium was a little bit positive, a little bit above 1,000. GameStop, this one actually not looking so good. Put out the video yesterday because I was excited about, the possibility of it, finding support around 28 and then bouncing. But we did just, consolidate right around there, closing yesterday at 27.96. So we'll have to see if the 786 at 27.92 does hold. But if not, we could be retracing to around 26. So good to be prepared for that. The max pain for GameStop, let's look that up real quick. And so I wish there was more options over here because I want to look at, let's see, the Greeks to type in GameStop to see if max pain for this week still is 25, and it is. So what that means is that there is going to be interest for market makers to be driving the price of GameStop down to below or right at, $25 a share. That is max pain. Max pain for retail, max gain for market makers. So let's look for that. I do think that this could be going lower, but still, if we are closing above 26 on Friday, so tomorrow the 17th, that would be good in that contracts closing more on the bullish side above max pain. So that's looking good. And so, yeah, before I get too distracted, I am just going to kind of zip through these other contracts because I do want to post links to other channels that I do watch that are starting some streams in about a few minutes. And so Highcroft Mining, this one, it does look green in the volume. And it does, but it's like the net call premium ended at $420. So this is nothing. This is a contract I want to get rid of. I'm probably going to lose money on it. It's just, there's not enough volume behind it. There's not enough money behind it. I'm sorry, it's a terrible stock to be trading options on. Intel, let's look at this. This is green over the course of the day. And let's see, but the net call premium was 1.7 million, so a lot there, whereas the net put premium was selling a decrease of 3.8 million. So that is looking like the bottom could be in for Intel. So I am excited about this one, to be honest. So I'm going to put it in my notepad, Intel. And then let's see, Luminar. This is just at least the contract that I follow, not too exciting. It does look like the net call premium over the course of the day was about 5,000, whereas net put premium was a selling of about 24,000. So overall, this is looking more bullish, but just as far as buying of calls, not too excessive. It's really just people trying to get out of those puts. Marathon Digital, this is looking more bullish, more green, because there have been a lot of selling of puts. It looks like a net put premium has gone down by 1.7 million, whereas net put premium, net put premium 1.74 million, whereas net call premium has gone down by only 90,000. So more people selling puts than buying calls, but a lot more people selling puts than selling calls. So that is looking like a bottom could be in. NEO I've already gone over. Quickly, I'll go over Plug. Kind of a mixed bag, so not much to see there. QuantumScape, net positive, and so we can see it ended the day. Net call premium of about 120,000, whereas net put premium was down by about 150,000, so looking good there. Rivian, I do believe this one looks like it's putting in a bottom as well. See, the net call premium went up by 1.2 million, whereas net put premium went down by about 700,000. Green over the course of the day, so looking good. And then finally, Unity Software. This one kind of a mixed bag, similar to let's see, GameStop in that sense, I believe. No, actually, GameStop is a little bit more bearish. So yeah, we'll have to see about that. And Nick, I do agree that AMC does look like, just looking at the options data here, this is like the first day that we have seen, kind of a more bullish shift. I guess we did see some green over here between these dates. This is January 15th. And this would be, wait, no, sorry, this is January 10th. This is January 8th. So there was some green over here, but we didn't see the net call premium go above 1 million until yesterday. So that's looking good. And then looking at the chart here, I'm going to end on this one because there's a show starting that I would like to get to watching. That's why I'm doing these pre-market preps a little early. This is GameStop. I want to be looking at AMC. I would really like to see a close above 356, and that would suggest to me that we could be reversing. This inside bar doesn't necessarily suggest that. We did get a wick above, let's see, Tuesday's high, but we got rejected from it. And so we want to be seeing a close above Tuesday's high, which is 356. Maybe we see that today. But yeah, I mean, we did hit 350, which I was eyeing, thinking that it could be coming down to $3, but really that being kind of an arbitrary, just, round whole number, that $3 as a target, thinking that this gap will not be filled, and we may be seeing that play out. So yeah, I mean, this could be, a great dip buying opportunity, but it could also continue down. So be cautious of that. But we're below $4. So I think, this is one of the best discounts we've seen in over half a year. But it could also always go lower as we have broken this downtrend. So do keep that in mind. And so, yeah, I'm just going to post some links to some videos that I will be watching. And so one of them is live. This one's about to get live. This one, if you're interested in Bitcoin, should be very interesting. And so I'm just going to post them in the description of this stream that we currently have going on. And so I'm just going to do game plan with Gareth Soloway. So I will copy the link for that and put that in the description of the current stream. And I can actually delete this junk that's not necessary after the question mark. And then I will do, let's see, over here, this is Scott Milker. Copy that. And so game plan I'll do with Gareth Soloway. This is Bitcoin with Scott Milker. And yeah, and then one that I like to watch with, maybe I should do GameStop with Richard Newton. And so he has not posted his video for the day, so I will just include a link to his channel. And so how do I, there we go. Just copy that, and I will put that in the description of this video. These are streams that I am going to be watching. The game plan with Gareth Soloway is pretty short, about 20 minutes long, so good to be watching before the market opens. He goes over a bunch of technicals that I find to be very helpful. Scott Milker always has some really nice streams that also start at the same time as Gareth's, so a little bit of a conflict there, but I think that the game plan with Gareth Soloway, 20 minutes long, watch that quick, get some ideas of levels before the market opens, and then kind of leisurely watch the chat that Scott Milker will have. And it looks like he's going to be chatting with this guy, Matthew Siegel, who is, I believe the fund manager for one of the big firms. I don't think it's BlackRock. I think it's, I forget. And we could actually, we can,
Getting started with
nope. Yeah, so with that being said, with me fumbling and all of that, I am going to end this stream. And I hope that you guys have wonderful days trading. Hopefully this was helpful, whether you're watching it live or watching it after the fact, going over levels, charts that stand out to me, going over options data that stands out to me to put some, charts, some stocks on the mind in preparation for the trading of the day. I think Intel looks really good. That's one that stood out to me. Got a request of WOOF, which I think also looks like it could be at support. And I do think, as Nick was suggesting, that AMC could be putting in a bottom here with a great discount with a low from yesterday of $3.21. But again, be prepared or at least have a plan for $3. But with that being said, thank you so much for hanging out. And if you guys do like this kind of video, do let me know in the comments. Do give it a thumbs up. And I'll try to do it every single day that I'm not working, which will be 5 days every 2 weeks because my schedule's a little odd. But yeah, take care. Have a great day trading, and I'll see you tomorrow morning because I'm calling in sick because it's my birthday, if you guys didn't know that. So wish me happy birthday as well. Take care, you guys.